The United States stock market just took a hit, and everybody's talking about a recession. Even though most of us may feel like we're already in a recession, you have to keep in mind that under the Biden administration, the definition of recession was changed. Some people are choosing not to pay attention to this. Unfortunately, you feel it in your pockets already. It's my opinion that this is a sign of things to come. Welcome to the Mr. Wilson's Got a Headache podcast. I'm your host, Dennis the Menace. Check this out.
You've got your own Cantro rule as well. That's your own homegrown recession indicator. Are we there? Are we getting close?
Mine's already triggered. Mine triggered 3 months ago. And mine looks at how fast unemployment growth, so how many people are unemployed, the pace of that growth rising year on year. And when it breaks 10%, historically, and just like the SOM rule, it's been similarly accurate. You are heading towards a recession, or you've always had a recession. Sure, I'm in the camp, and I'm a strategist. I don't necessarily do point forecasts, but I continue to think the unemployment rate is going to continue gliding higher at a modest pace or moderate pace. And I think what investors are fearful about is a quick acceleration in the unemployment rate. Not something we've seen yet.
Most people feel like we've already been in a recession. But as I mentioned before, under the Biden administration, the definition of recession has changed. If you've been on my Facebook page, then you've heard me talk about this. When the Federal Reserve decides to print money, we have a false sense of where the economy really is. Everyone's been pointing to how strong jobs have been. Everyone's talking about how the economy looks like it's growing. And most importantly, everyone's been talking about how strong the stock market is. Today, nobody can hide behind that other information. Unemployment is on the rise, and there are less jobs being created. A lot of people are saying that this is what caused the stock market to dip so heavily yesterday. And even though it seems like a good portion of it has rebounded, we're expecting to see this continue throughout the rest of the year. Check this out.
When the Fed pivots, so when they start cutting interest rates, it is common that initially the stock market goes down. Okay, but listen, I'm not saying doom and gloom. If the Federal Reserve is cutting interest rates and printing money, which is what they're gonna do, in the long run, yes, that's gonna be a boost to financial assets. It's gonna be a boost to the stock market. Okay, so the concept is very simple. There's two things. The first thing is that if you lower interest rates and you make it cheaper to borrow money, then it's gonna increase demand, right? The second thing is that if you print trillions of dollars, then you have more money chasing too few goods. Both policies increase demand and fuels inflation. So I want to break this down for you nice and simple. Let's use a real life example. So if you look at the mortgage interest rates right now, 30-year fixed, what are they at? They're close to 7%. They're a little bit under 7%. If you lowered the mortgage interest rate right now to, let's just say 3%, then what's going to happen? The cost of borrowing becomes cheaper, right? So more people are going to look to buy a home. And if that's the case, that's going to increase demand, and that's going to cause home prices to go up, or that's going to at least put upward pressure on home prices. Let's just say that. It's going to cause financial asset inflation. Now let's break down the second piece of this, the money printing policy. So they call that quantitative easing. Don't be fooled by the technical term. It's really money printing. That's what it is. Okay, so I'm going to give you a straightforward example. This is an exaggerated example, of course. It's just to illustrate the point. So let's just say you give every American $1 trillion. Might as well throw in illegal aliens as well. So you give everyone $1 trillion, okay? So let's print and print and print and give $1 trillion to everyone. Do you think in that case that everyone is going to be able to buy a Lamborghini because everyone's got $1 trillion? The answer is no, of course not, because you can print dollars, but you can't print Lamborghinis. That's not how it works.
Usually a month after the job report, there's a revision that comes out. They've actually seen that the initial number that was reported was actually around 50,000 jobs less than what was told to you and I. Now, I'm not saying they're doing that on purpose, but most of us don't go back and check those revisions. So we have a false sense of what's actually happening day to day. To add to that, the Federal Reserve is planning to cut interest rates in September. They previously talked about 25 basis points. Some people are saying they need to do 50 basis points. In most times in history where the Federal Reserve has cut interest rates, the stock market falls. How far? That's yet to be realized. At present, Americans are still spending money. Now, money has slowed down slightly, according to McDonald's, who's having trouble selling Big Macs, but we haven't seen a major drop-off yet. In American culture right now, it's very popular to make yourself look like you're doing a whole lot better than what you really are. I mean, you gotta have the right shoes on, you gotta have the right pants on, you gotta be driving the right car, you gotta be speaking the right lingo, you gotta be doing all that type of stuff in order to be accepted by most people. Check this out.
The Federal Reserve will declare victory on inflation, and in order to preserve the jobs market, the Federal Reserve will cut rates back first to 2% and then to 0%. They will do so rapidly. They won't do so based on just today's jobs report. In fact, they're going to try to exercise restraint, and they will wait. They will wait until unfortunately it's too late and they'll have no choice but to cut rates back to 0. That's when you're going to get a lot of folks who argue, oh my gosh, this is going to set off a second wave of inflation. No, it's not, because everybody's going to be jobless. You're going to have manufacturing supply chains that are so freaking loose that you can't have inflation because nobody can raise prices even in an environment of low interest rates, because nobody will be able to finance anything, because A, they'll either have lost their jobs or their hours will have gotten cut or their salary will have gotten sliced. I talked about this today in my course member live stream. Listen, I'm not always right in my trades. I always make that clear. I'm not always right in my trades. I do not guarantee that you are going to make money. But what I do every single day is I show up. I try my best and I give you perspective, and I'm going to give you a little spoiler alert of what I talked about to course members today. I said, listen, if we don't go into recession, fantastic. But if you ask yourself right now, is now the time to buy the Cybertruck? Is now the time to YOLO all your money on new clothing, an expensive vacation, a home edition? Is now the time to put your family's future at risk, or is now the time to be cautious? My belief is the time is to be cautious.
I'm originally from Raleigh, North Carolina. I lived in Raleigh for a good portion of my life. I lived in Fayetteville, I lived in DC, I lived in different places across the country. But before I moved to where I am now, I was in Raleigh. The amount that I was paying for just my overhead, place that I was living, was actually normal to me, and it didn't feel that bad. But I wasn't reaching some of my long-term financial goals quite as fast as I should. When I do things, I don't look at the minimum. I say, hey, if they say it takes 10 years to do this, how can I do it in 5 years? So I decided to move to Sanford, North Carolina, which is a small town on the outskirts of the Raleigh metro area. When I first got here, my overhead dropped by somewhere around $900 a month total. It was like stepping into back in the day, Raleigh, when I was a little kid, the prices out here. Now, since then, that overhead has creeped up around $300 more a month than when I first got here, and it's only been around 3.5 years. Either way, I'm still $600 cheaper on just overhead. I'm not talking about buying clothes and all this other stuff. I'm talking about necessities like a roof over your head. And even though things have been increasing, because the amount of money that I make has also increased, I got even more breathing room. But the biggest thing is I've cushioned myself for a rainy day by moving out this way. Even with the prices rising, the absolute point of this video is for you to consider doing the same thing. Even if you don't go as far as moving into a different city, there are different ways to save some money in your expenses, and then being responsible enough to put that money in the right places can help you cushion during a hard time. These type of subjects are not really popular in American culture because we just so flash. Ain't nothing wrong with that. I do it sometimes too, but I do it in moderation. And now when I look down and I think about myself as an older person, I can actually see that my life won't have to change if I stay on this path. I'm not a financial advisor. This is not financial advice. This is just telling you some of my story and some of the research that I've done. So hopefully you can make an informed decision for yourself. Only you know where you are and where you want to go. But all the writing is on the wall. Time is running out for people, in my opinion. And currently it looks like Donald Trump is leading in the polls, so he most likely will be our president. So if that happens, I'm sure he's not going to spin the United States into oblivion trying to give everybody free money. We've already done that. We can't do what we did for the pandemic. You can do whatever you want to, but I refuse to have more debt than I do income, unless I'm making an investment like buying a house or buying some land. But right now it doesn't make sense to buy a house because the price is ridiculously inflated. But at some point when everything comes crashing down, if you got some cash, if you got some assets that you can pull from, some collateral to take to the bank, those are the people who are going to be taking your house, your car, for pennies on the dollar. It's my plan to be one of those people that's going around. I missed it in 2008 because I was just too young. I was just coming out of high school, a few years removed from high school. I ain't know nothing about that, and I won't making this type of bread. But this time, I might be the one to come by your house. It is what it is. Maybe I'm wrong. Let me know in the comment section. I want to hear what you think about it. Maybe I'm losing it. Do me a favor, like the video, hit the share button, subscribe to the channel, hit your bell notifications. I'll see you in the next video.